Alright, wir sind jetzt hier in Tallinn immer noch und zwar zusammen mit Marek und mit Mikael von einer, ja, jetzt wissen wir auch von welcher P2P-Plattform, nämlich bei Estate Guru. Und natürlich werden wir aber auch dieses Video in Englisch aufzeichnen und dann später wieder natürlich übersetzen für euch. So, Marek, thanks for doing this interview with us, and we would like to know first how you founded the company together and what was your intention. Why did you found Estate Guru?
Mm-hmm. First, I would like to thank you for coming by and visiting our office. It's a big honor to have such a famous German bloggers to have in our office, and I hope we can give you some important information that you would like to know. Yes, so regarding the reasons why we founded Estate Guru is that it's pretty practical reason. As I have a property background myself, I've been in the property business for the last 15 years, and very often we have seen the situations where there is a very good project, there is a very good security, but the banks are just either too slow or for some regulatory reason they are reluctant to lend to this project. And it was especially the case when was the last financial crisis in 2008. A lot of projects were saved with private investors, and that's actually our own experience that we were able to finance our projects back then, and with the private investors, and this is the reason why we one day thought that it's a big opportunity to have such a model like Estate Guru has.
Okay, and Mikael, can you tell us what you do here at the company?
So actually, Mark is a founder here. I joined the team last year. So I have when Mark is a real estate background, then I'm the banking guy here. So I was working a long time in one challenging bank, Estonian challenging bank, operating already in 9 different countries in Europe. Mm-hmm. So my current role here is to basically bring this banking knowledge in one place, but also as I'm a chief operation officer, so I look day-to-day operations and deal with the key areas of the business. For example, expansion or technology or sales parts. So these are the things looking after here.
Okay, so for starters, could you just maybe give us like a simple example of how is a project realized, like go through the process, like for just an absolute beginner, mm-hmm. so that they can better understand how everything works on the platform?
Mm-hmm. Okay, maybe short about the product as such, as financial product, what it is. Estate Guru facilitates then short-term property-backed loans for developers and for businesses, and our average duration of the loan is 14 months. So it's not a mortgage loan, it's not a long-term loan, and people usually need it for a short time, like 6 months, 9 months, 12 months, or 18 months, and there is some what is important for them. It's a speed of funding, and it's a flexibility of the payment schedule, and also that people. We have realized that people come to us because they appreciate that we understand the property and the business property projects. Yeah, so very often they go to bank. Maybe they meet some bank officer who maybe doesn't understand property so well, and then it goes to analytics, then it goes to back office, and the process takes 2-3 months. Yeah, mm-hmm. In average, our process is about 2 weeks. So this is why we're different, and how the process works. We get from different channels. We get the loan application or the project coming into our people. Then we are going to do the due diligence on the security, on the borrower, of the business plan, of the exit strategy. and we consider ourselves like common sense lenders. We're not looking so much that we have like 100 boxes to tick like banks do, and if 99 boxes are ticked but one box is not possible to tick, they said sorry, our regulations say that we're not able to serve you. And in this sense, we try to be flexible. We want, if we understand that the project is good and the security is strong, and then we basically prepare the project for funding, and which is then approved by the lender. We just help him to fill the project so that it's in a similar format for investors, and then we put it to the platform for our investors. And investors get notification when the new project is up, and then they can invest into this project, either using the auto invest if they are not always in front of computer and they just want to diversify, or they read the project through and invest manually. So shortly, or the process.
So is like the many P2P platforms that are actually, this is a P2B, I always say, platform, not P2P, and so the normal loans are like consumer loans. So is there maybe what are differences between Estate Guru and a normal consumer loan P2P platform that investors have to realize before they try to think about investing here?
You want to? We can both, but compared to, first of all, it's not consumer loan.
Yeah, exactly. That's
what it means. It means that all those borrowers who take loan through our platform, they actually give security. And in our case, it's a real estate. So basically, you get first rank, mainly first rank. We have done sometimes also second rank, but mainly first rank security, meaning that all the loans are secured against some kind of property element.
Yeah. Hypothek,
so
basically.
To say.
You have in German hypothek, right?
Yeah, of course.
Yeah. So
but
what it means is, like, for example, when it might happen that there are some problems with the loans, which in some cases it is still, what it means that when we are starting with the litigation process, we can use the same hypothek, so to say, and start litigating it. So we can sell some real asset and return the money out of this for the lenders. So it's a more secure way than consumer loan. With a consumer loan, you can only go by law and hope that at some time this person will have some money. But in our case, it's always you have some real asset, but you can also start selling.
And one thing I always think it's important to know that this security that the developer has to bring to the market is like doesn't necessarily have to be the real estate that is developing. So it can be his own house, for example, or hypothek, and it's not necessarily the building that is being developed, right?
Yes. No, well, in our cases, yes, we look the liquidity of the security and the exit strategy of this developer or businessman, and how he's going to pay it back. So we must be sure that it's going to work. Yeah, his business plan. And we have had cases where a small developer has just given his private residence or some other project or a building as a security to build then a small apartment house. So yeah, it's also country by country. Like in some countries, for example, in UK, the owner occupied residences are not very good securities because it's hard to liquidate. And but in Baltics where we are, it's not a big case. At the moment to have these kind of securities, and sometimes we even have agricultural land or forest as a security. So as we are property people between the founders, it's important that we understand what is the security and what's the liquidity of the security.
So basically it all starts with the security. If you are sure that it's valid and it's good and we can sell it in even a stress situation, then we start with this. And it also means that it always is security against security. So when we enter new countries, we also look at is local legislation good enough for us to make these kind of deals. And this means that sometimes it could be also borrowing against some business. Borrower wants to expand his business, he has some property there, like Marek said, own house or actual business where he operates, but it has some real asset. Then we look into this and then we can lend against also the asset.
Are you the only people who evaluate the security from the developers, or do you have external help that also develop the or not develop but evaluate the risks and the securities?
Yeah, of course, we always use very reputable real estate evaluators, and the format of the evaluation is the same as banks using. So we just have within our team, one of the founders is professional real estate evaluator who can double check the evaluations, and sometimes we see that if the security we take is not very traditional or is a little bit maybe outside of city center and it's a little bit tricky, then we always have the second opinion. So we sometimes even have free evaluations informally. Now formally we have one, and then we have sometimes desktop second opinion, and then we sometimes call even third or fourth evaluator to be sure that this is something that we get it right. Yeah. So it's one of the key elements in our business, that our security that we take is valued right. Yes.
And all the loans we take in will go, actually, we do the loan analysis, we do understand the project, and everything will go through internal committee. And when we are sure that everything is fine and this is something we can put live, then after that, when the decision is positive, then we will put it live. And then, as Mark also mentioned before, then actually every investor can also make his or her own analysis of the project.
Yeah, because real estate is the valuation of real estate can be different, like sometimes 10%, 20%, in some cases even more, And for us, it's important that if something goes wrong, we're able to sell the asset and return the investors their investment. So that's the key viewpoint.
Okay, maybe a question from Lars
Yes.
or your community.
Today you showed us some projects we are both invested in. Can you tell us a bit more about the projects?
You see these free houses, right?
Yes.
Because I wasn't with you. Yeah, this is the project is an exclusive free house project by the sea near Tallinn, so that there's a beautiful views to the panorama of Tallinn and from these private luxury houses, and from the other side there's a nice views to island Aegna, and it's a development loan that we raise in tranches, in phases. We had the first phase against the land with a basement. Then the developer started to build it. He had a first floor ready. He had the quantity surveyor's report of the completed works and the new valuation. And then we made the second phase of the loan. So it's like a phased development loan, which is like alternative for small development companies who don't get maybe development loan from the banks, that they could use platforms as a state guru to fund their development projects in 3 or 4 phases. And so how do you like the house itself? What do you think?
It's very beautiful.
Yeah, I think so. It's a really cool project, and it's quite exclusive one. So what we look in this kind of cases that again, liquidity, if there would be a problem during the development phase or during the sales phase, that we haven't given too much money to this kind of project. So if something goes wrong and we would need to sell it, that there is enough room to make discounts to the price. So that's our risk assessment in this project.
Okay, what I sometimes see in Mallorca, where I live, is like also really beautiful houses built somewhere, but only to like have 50%, and then you can see every time I walk with my dog next to them that they deteriorate because someone is not developing them further, and sometimes even like also really beautiful houses are built finished, but they no one lives there or nothing happens with them. So what is if something goes wrong in the development, or it takes a lot longer than it's planned, so what happens then?
Mm-hmm. Yeah, there are always risks when you develop. There could be some planning issues or some construction issues. So that's the reason why you don't give more money typically than 60% of the current value of the project. Mm-hmm. So that if we forced to sell the project even before it's completed, then 60% of the value should cover the principal in most cases. Yeah, and why buildings are empty? It's when they're ready and when they stand like this. Probably the reason is that the seller is maybe he wants to get too big money for his house, and maybe it's for some small developer it's his gold mine. He thinks that when he builds this house, he doesn't sell it like cheaper than he has dream. That he has some dream of I want to get 1 million. I don't sell for less. Yeah. When the market is maybe 700,000. Yeah. So it's about the market statistics and trends that you have to follow also, and that's what we do. It's the analytics.
As long as he paid back the loan and everything, it's no problem for the investor. Then afterwards,
So that's why this real value, current value, is most important. Mm-hmm. To understand this, if you have this estimated right, then you have like quite good buffer. So like Marek said, we're giving up maximum 75 LTV, meaning that if your property value is 100,000 euros, then maximum we give out this 75,000 euros. So, but in average, current platform average is actually 59%. So there's even a 40% of this buffer.
Can you maybe explain for the new beginners what the LTV mean?
Mm-hmm. Yeah, like I said, LTV means like when you have a let's say property which is valued to 100,000 euros, then the loan what we lend against it is maximum 75,000. So LTV means that the ratio between the loan you give out and what's the property value.
So I think a couple of weeks after I started investing last year, there was this one case which you communicated very transparently. That was really good. That one developer couldn't pay the loan or defaulted on the first rate, and so. My question is, can you tell us a little bit what happened next? You said that there would be an auction, but then it didn't even come to that, I think. So can you just, for potential investors, explain what happens in such a situation and what happened in this specific case? I don't know if you know which one I mean.
We're following all our loan payments very, very closely, especially when the maturity comes to an end. Mm-hmm. And about 2 months before the maturity of the loan, we activate our communication with the borrower, ask about his repayment plans or refinancing plans. And in this case, the borrower actually he initially he wanted to develop this house when he took the loan, and he had about 80% completed villa. Yeah, very nice neighborhood, very nice building. But then during the process, he didn't complete the house, and he also didn't want to sell the house. He was one of these developers who really wanted to get the maximum price, but he just didn't have at the moment, the resources to finish the house. So the funds that we borrowed, we lent him, wasn't enough to complete it, and he's supposed to have his own funds. Yeah. So and then his exit strategy was to refinance our loan, and he had been working with this refinancing project case for 3 months. And but our maturity had already ended, and we had to, as we're protecting our investors, we had to do something. So we actually took the ownership of the house. In this case, with the agreement with the borrower that we extend the deadline for the next more 2 months, so that we made a compromise so that we got the title, like ownership, and gave him an extra 2 months period. Yeah? And why we took the ownership was the reason that when we have the ownership, it's much easier to liquidate. We don't have to pay a liquidator. Usually it takes 10 to 15%. Yeah, and this 10 to 15% actually comes from the pocket of the borrower or investors if the final sales price is not covering everything. Yeah. And but then fortunately for everybody, he was able to refinance it with somebody, and our investors in the end got 13.7% return for the whole investment. So it was a happy ending for everybody. And but yes, we were very active and did lots of activities and communicated with this borrower weekly, and or tried even to help him with the refinancing options. But he found the refinancing option himself in the end. Yeah.
So actually, it was a good case for us because we have our own internal procedures how we follow when loans get late, and actually we have also all the procedures for litigating the property. So in this case, it was actually for us first case where we had to start with the litigation process. So we follow the whole procedures we have set up for us. So at the same time, as it was the first case, then we tried to be really transparent on this. Currently, we already have this loan updates in the platform, meaning that you always, as an investor, get the overview of what is going on with the loan. Yeah. So, and there we also communicate what is happening. But with this case, we wanted to be extra sure that everybody knows how the process goes. And we actually have published all the information on how the litigation process in our currently operating countries happens. So it's, if you're interested, quickly saying it's quite straightforward. Basically, when we see that it's not coming back and the deadlines have been missed, so basically we give it over to a security agent who is holding the mortgage for the investors. So this security agent starts the litigation process, gives it over to a bailiff agent or litigation agents, and for example, in the Estonian case, when it goes to litigation, so the litigation agent will inform the borrower that now we start the selling process. In this case, the borrower has 30 days voluntary payment, meaning during this time he can still repay the money and everything will be solved quicker. If nothing happens during that period, then basically auction is announced, and then there's once again like 21 days for registering to this auction, and then it's a bidding, and if somebody wins the bidding, then basically he gets ownership of the property, we get the money back, and the investors get the money back.
So basically the risk in the worst case scenario is that, for example, if the property is 100,000 and the loan is 75,000, then there's an auction and maybe it's only sold for 60,000, so there's the loss of 15,000, then the return is either lower, or in some cases it could even be that the investor has a loss on that investment. So that's like the worst case scenario.
Yeah, it's theoretically possible, of course, when the market goes down very rapidly, and that's why we always suggest our investors to diversify, to build a better portfolio of tens of different properties. If one or two properties go to auction and then maybe one property is recovering 90% of the principal, then when you diversify properly, the overall return should be still positive, as our average loan term of the total portfolio of the returned loans is 9 months, and our average loan to value currently is 59%. So what that means that in 9 months the market should go down more than 30%, and the principal is in danger, like when you take the whole portfolio. So yeah, that's the best advice what probably you also give to your investors, that just diversify. Yeah.
In our case, now it's already possible to not only distribute your investments between the project, but actually what we are allowing is to geographical basically diversification. So we currently operate already 3 countries, and actually last week we also opened Finland market. So already 4 countries, and by that we are actually the biggest platform in Europe, which is operating in so many countries already.
And Spain is going to be on Monday or Tuesday probably, first line.
Okay, good. More questions from you, or?
Yeah, we saw Estate Guru is growing very fast last year. Where do you see Estate Guru in 1 year from now?
In 1 year, this year we plan to launch, as I said, in Spain, Ireland, and the UK. And I think this is already quite an ambitious plan for Estonian fintech startup, but we're pretty confident that we can do it, because we have been preparing these markets already for a year. We have legals completed in all these countries. There are some last issues to be solved in the UK, but we see a lot of potential. We see a lot of potential in these countries, and we just came back from Ireland, for example. We were part of Estonian Prime Minister business delegation 2 weeks ago, and we were given pretty good overview of Irish property market. And for example, currently there is a shortage of 15,000 residential units per year, mainly in Dublin area. So there's a big need for development finance, and we're working on it to get it going there as soon as possible.
Maybe also for airports in Berlin. Yeah. I don't
Marek, is there some plans for Germany too?
Yeah, Germany is very important market for us, as actually German investor group is our second biggest investor group after Estonians, and it's growing rapidly. It's going at the same pace as Estonians investor group, and maybe one thing to mention is that there's also a little German bank that has done due diligence on our procedures and our loan book, and as we plan to grow fast this year, we need to look also some institutional money, and we hope to get this small German bank to be our investor. And I think it's hopefully this is happening pretty soon. And when it's happening, I think it's a pretty good quality mark for our procedures and underwriting. To have these procedures come through German bank's credit committee. And this year we also plan to visit Stuttgart Investmesse. So
okay.
so if you plan to be there, come to say hello. And yes, we were already last year there, and we liked the vibe, and nice to be back this year.
Okay, cool. So last question from me. Regarding your personal investments, do you invest in other P2P platforms? You don't have to say the name. And also other investments like stock market, or do you focus mainly on your real estate?
I have a real estate development company where I'm passive founder, and there. There's some part of my investments, but last 4 years I've been very focused of building Estate Guru, so I haven't really followed the stock markets. What I follow recently is the ICOs and the crypto world, it's interesting space, and I think I haven't really made up my mind yet. Should I invest there? But I have some coins, but I haven't gone deep into it yet. But this is something interesting. I don't invest in other peer-to-peer lending platforms currently.
Okay, and you, Mikael?
Yeah, I have done some other P2P, looked them some small investments in other platforms, but main focus here. And as I'm also actually, even though I'm from banking, then I'm also interested in real estate, and I've been doing some real estate investments previously, and now also continue. But it's still small things what I do aside, but mainly focusing on here and making goodies and making sure that there are really good investment opportunities for our investors.
Okay. Thanks a lot.
Thanks.